what's going on, everybody? Welcome back to the top 3 swing trade stocks video of this week. And if you're new here, this channel is about swing trading. And again, why am I doing swing trading videos is because not really day trading, because I find it suits my own time schedule. It suits people that I know are still working, or if you're a student who are actually still doing their own schoolwork and they want to make some extra income on the side. I personally, like to do swing trading because it is something that I do a lot of research on the weekends, and when a market opens from Monday to Friday, we just execute on plans that have already been predetermined beforehand. So there's not a lot of prep that needs to be done, because I do like to spend not most of the time looking at my screen, and I've done that many times when I tried day trading. And day trading, although it was profitable, but it was too much stress. So again, it's about risk versus reward, right? Or in this case, time and reward. Because if day trading can generate a certain amount of income, but I have to spend maybe like a lot of hours, every single day, maybe a couple hours every single day throughout the week, which is around 5 times 2 hours a day to do the research, to do the planning, everything, and that takes up to 10 hours. And what happens is, if I can make the same amount in swing trading, where I spend the amount of time in the weekends, which is much lesser, and then pre-plan everything out and take those longer trades, bigger time frame trades, which capture a bigger portion of a certain trend, then it is more profitable and it takes less time, and I think it suits my own time frame in general. So with that out of the way, okay, if you are my old subscribers, smash the thumbs up button, alright? And if you're new here, okay, watch my content, okay, and if you like it, right, if you like it, okay, then drop a thumbs up button and consider subscribing to this channel for more educational videos like this one, as well as trade ideas. Without further ado, let's jump straight into the video, everyone. So last week, right, was a boom whipsaw, right? Okay, so we saw one downturn and a quick reversal up. Okay, so I'm going to cover that in my update for last week, which I don't see many channels do. Then that was it for the last part. And right now, I'm going to cater to both the new and the old subscribers by talking about this week's trades. So this week, let's go through LATE format, the long-term trend, area of value, trigger to enter, as well as exit strategy, right? So the first one we're going to talk about today is SPWR, and I'm going to apply the LATE format to this again. Okay, and I'm going to show you some extra tips and tricks, that I maybe have never talked about in today's my old videos, right? I'm going to review some of the tips that I had that I think that's been working very well for me for the past couple of swing trades. So first something I'm going to talk about is SPWR, SunPower Corporation. And SunPower Corporation is a highly volatile stock with a beta of around 1.84. That's really high. That means for every one tick that the market moves, it moves around 1.84 times more. So that's a very volatile stocks. So volatile stocks can have huge downside and as well as huge upside. But however, in swing trading, we always manage our downside with our stop losses. So again, swing trading is a risky trade. Okay, it's something that requires risk management. Okay, it's not a buy and hold strategy. So again, if you are just buying and holding all the stocks that I'm talking about, then you are in for a bad surprise. Okay, so if the trade goes wrong, you exit out the positions and you recover back by getting those on the good trades. So SPWR, you can see the arrow, right? The long-term trend is in a downtrend, down trend, down, right, down. But it reached this bottom over here and it starts to consolidate, popped up quite a little bit, although it doesn't seem like much, but $25 to $30 is quite a significant percentage of upside. But due to last week, you can see this red bar candle over here, this horrible red candle over here. That was the whipsaw that was seen for last week, right? Suddenly, bam, everything just down to the downside, right? Every single wedge got broken. So you can see overall market conditions have such a huge impact on our swing trading, right? As you can see over here, the Nasdaq, okay, this one red day, right, we just took out every single freaking stop loss that is in the market, right? And NYSE, every single thing, okay, so it was the day before the close, the day before Friday, right? Just bam, everything to the downside, gone, right? So you can see overall market conditions, you got to take a look at those, and that's why sometimes I always go through this sector analysis with you guys. But although it's not been very popular, not many people want to know about this, so sometimes I integrate that into my swing trade picks. So if you wish to learn more about this, right, I have an old video about this. Go and watch my old videos on this. But otherwise, okay, you can just follow along the picks. So SPWR, right, you can see that the long-term trend has finally been broken out. Okay, so the long-term downtrend has been broken out. Right now, it's trying to cower itself back up to the upside, and right now it's approaching this 100 moving average, which is a key turning point. This 20 moving average and 100 moving average is converging, so this is a key point which we will want to take a position in and set a tight stop loss below right over here. So area of value, okay, area of value definitely will be near the 20 moving average. So again, the 20 moving average is ever changing. It will definitely move upwards like this one. Okay, so let me just draw it up for you. Okay, so the 20 moving average is a line, right? For those of you who don't know what's a moving average, is go and search it up on Google. It's pretty easy. All the way up here, that's where anywhere around here, right, as time progresses, right, you want to take a position near the 20 moving average. So right now, it is at this pricing, but maybe 5 days later, the moving average will be probably around here. Then you want to take a position around here. So again, there's no definite number because it follows the moving average. But we want to see that it bounce above. Okay, there's a strong rejection over here. You can see over here, there's a rejection. Over here, there's a rejection because of the candles over there, the wicks of the candles over there. So area of value is near the 20 moving average. Trigger to enter. Trigger to enter, I would say, okay, now this is a pretty good area to enter. And why do I say so, right? So this is a quick tip that I want to give you, okay? So everybody listen quick, right? So what I like to do is, okay, you know, we all know that the market moves from a high volatility to a low volatility environment, right? Big to small. Am I right? So things are the most quiet, right? They seem the most quiet when suddenly, bam, to the upside. And that's where people like get greedy, right? When they see these big red, green candles, right? Green candles, right? Then what they think is like, hey, that is a super, super huge candle, okay? I'm going to get greedy, I'm going to get in, and that's where the market makers or whoever, bam, goes to the downside and they get trapped and they lose their money, lose their stop losses. So we want to be the ones that are in the trade before this huge greediness happen, okay? This huge spike happen, okay? So that we can maximize our reward and lower our risk, so that our RRR, risk to reward ratio, is better. So what I like to do is I like to count the last 7 candles, right? 1, 2, 3, 4, 5, 6, 7, 8. Okay, 7 candles. 1, 2, 3, 4, 5, 6, 7. So if this candle is one of the smallest, right? Okay, big candle, big candle, big candle. It's one of the smallest, okay? And you can even switch it up, okay? I can go over to the colored bar, right? You can click over the colored bar to see the range of these candles, right? This is one of the smallest, okay? 1, 2, 3, 4, 5, 6, 7. This is one of the smallest. And if it's at the smallest, right, very, very high chance the next candle bar would be a thrust, okay, to the upside, okay? Or what happens is it might actually form another bar, right? Okay, another bar over here that's of equal size or even smaller. So again, if this happens, okay, to me, it is, from all the charts I've been reading, is a high chance that the next candle or the next candle will be a huge bar to the upside or to the downside. All right, this is to maximize our time in the market, because if you take a position so early on, right, then our money is kind of locked in there, right? So in a sense, we want to go in at the very last minute so that our capital can be deployed, then we take our profits and be deployed somewhere else. Because again, capital that's trapped somewhere is time money, all right, it's lost money, because time is also equals to money. Our capital is worth something, all right, time value of money. Okay, your money now is worth so much more than money in the future. Right, that's how banks work and everything, right? So that's how that's the secret tip that I'm going to give you, and that's the trigger to enter, right? So exit strategy, right? Okay, profit taking area as well as your stop loss. Okay, stop loss will be somewhere below the moving average. Okay, but considering this market environment, right? So remember what I said in last week's video, one of the tips I said that, you know, market conditions, you got to be very, very adaptable. So again, if you see this kind of market where it's so whipsawy, right, it's so volatile, it goes one way to the next, your stop loss cannot be so tight, okay? You got to be a bit more looser with a stop loss, okay? You can fact check me on this. I definitely said it in last week's video or last week's video that, you know, we got to be more flexible. We cannot just, you got to set a stop loss and move your stop loss according to, you know, the overall market conditions. But once you set a stop loss, respect the stop loss, right? So this area over here, a strong resistance, okay, I'll actually set my stop loss somewhere, okay, a little bit below here, because I'm taking into account all the whipsaws that actually happen, okay, right below this moving average over here that is happening throughout the entire week, right? There's a high chance that you just bam to the downside, touch it a little bit, and just, you know, reverse to the upside again. So right now, I'm going for very greedy. Okay, I'm going for maybe a 1-to-1 risk to reward ratio. So again, I'm going to take a position around here, and the profit taking level, the first profit taking level will be somewhere around the highs over here. Okay, the highs over here. This is the profit taking area. This is the stop loss. So again, it's around a 1-to-1 risk to reward ratio. Not very good risk to reward ratio, but again, there's a high probability that it will go to the upside. And also taking into account that this is a very volatile environment. And also, since it's a very volatile environment, very high chance it might just spike up, hit your profit target, then you take your profits, and it comes down again. You can even play this trade 2 times, 3 times, right, for SPWR. So this is another area that you could actually play. So this is the major resistance area around here, which we want to take most of our profits. The next resistance area will definitely be around $36, but that requires quite a little bit of breaking point. So that's up to you whether you want to take all profits or take half profits or scale up however you want. Okay, so that is for SPWR. So I went through quite detail on our LAT format on SPWR, and right now I'm just going to touch on quick one for the next 2 companies. Alright, next 2 companies is Dalco New Energy. Okay, and Dalco New Energy is a company that's in the energy sector, and I've talked about this a couple of times in my last few videos. And we said, I've actually left this out for a while because it has been on a downtrend, but recently I've seen some strength coming back into this company, which is a huge sign of market manipulation. So such a clear sign of market manipulation. So you can see over here that there's this stop loss was our hit. Okay, then it rallied down again. Okay, then reversed and continued back up. Okay, so this is a huge dip followed by a huge rally, right, to go and close up above this support area over here. And again, it bounced down, we got rejected, and now it's been on an uptrend again. So after the dip on Friday, right, I do think that this is a decent entry point, to enter around here, around $67 to around $65, to swing to the range area, the top of the range around $82. Right, so $67 to $81 is a pretty comfortable, around 10% move, or a little bit more, depending on what kind of entry price you're going in. And we're not being greedy, we just want to swing this range up, down over here. Let me draw it out. So we just want to swing this range over here, right? So this range. So we want to swing this, take profit at the top, okay, then buying around the bottom and setting a clear stop loss right below. Oh, pardon my drawing. Okay, set a clear stop loss right below this range itself, right? So in case this kind of thing happens and it breaks down to the downside, right, you would not be taking a huge dump all the way to the downside in case something huge really happened. So that is for DQ. Okay, DQ is another stock that I think I might go about doing that. And last stock we're going to talk about is actually CALX, and this has been a good swing trade. Okay, CALX, I've traded this a couple of times because it's always been such a delicious looking wedge formation, right? Swing up from $37 to $47, then down again and swing up again. And I made quite a few big bucks on this stock. But again, this is the huge problem with a lot of swing traders, right? They have this bias. Whatever that they think that they worked out before will work out again. No. Okay, you gotta treat CALX and DAQ, Dalco New Energy, and SPWR equally. Because what worked in the past might not work now again. Okay, this could be a false setup. Okay, so again, you gotta be very objective. You cannot be clouded by old successes and old failures. Okay, because there's a study that shows that old traders, right, tend to avoid stocks which they lost money on, and just trade the stocks they have made money on before. So that's the worst thing that you can do, to let your psychology kind of overshadow your logical thinking. So again, if the stock itself take a huge dump, okay, on Monday open, right, then again you gotta be a bit careful. Okay, why is there such a negative sentiment on this company? Don't enter the stock. Okay, always be objective. Look at the price action, look at the charts. Don't look at your emotions. So with that said, right, I can rest my peace in mind. And right now, let's talk a little bit more about how I'm going to swing trade this. Again, right now, 1 day time frame all the way down here. Okay, if you want to go on to the 1 hour time frame, right, that's where I find it more interesting, right? And you can definitely see that it's near the 100 moving average. So you can see that right now consolidating near this area, right, and it's just waiting, right, to pop up over the 20 moving average. And also you can see that this has a history of having a huge dump, then kind of consolidate a little bit, then starts rallying massively, right? Huge green bar candles, institutions or whoever buying up this company. So I foresee, right, that if this small little candle over here, there's a lot of tight consolidation where there's a lot of fighting between the bulls and the bears, and the congestion is kind of in. Okay, a huge move is coming either to the downside or to the upside. But you can see the upside is so much more than the downside, right? Because you can see over here, right? Let me just draw the line. Okay, the support level is here, the resistance level is here. Okay, you can set a stop loss just right below here, taking into account these volatile conditions, right? Around $41.21. Enter around $42. You're risking around $1 plus for potential, $7 to $8. Okay, swing it all the way to $48, the top of the range. So CALX, if it manages to close the trigger to enter closing above the 20 moving average, which is the yellow line, and holding there, would be a good sign for CALX. Okay, and that's it for the top 3 swing trade stocks for this coming week. And let's us go on to the update for last week's picks. Alright, so for my new viewers, okay, you probably get bored now, okay, but no worries about that. If you enjoyed my content, if you enjoyed the top 3 swing trade stocks recommendation, and you think that my channel is kind of unique, it offers a very precise and educational content that you need, okay, then drop a like and do consider subscribing to the channel and hit that notification bell. Alright, and now to my old subscribers, an update for last week's picks. So last week, right, was a pretty decent week. With that whipsaw itself, we still managed to, salvage. Okay, I know a lot of people who lost quite a lot of money because of the whipsaw. But again, if you followed the stop losses as well as the volatile gaps that we have discussed about, then you will be probably much more safer than the others. So X, right? So for X, okay, Monday open. Okay, Friday, right? Okay, Tuesday. Okay, Monday was a holiday, right? So Tuesday open. Okay, immediately starts dipping, right? Then would you want to take a position on it? Okay, not really, right? So it dips all the way in. And for me, when I saw a recovery up here, right? Okay, near the late on Friday, right? Then that's where I took a position, swing to a little bit of upside and got a good 4% plus return for X because I saw a huge comeback on Friday, right? That's for X Corporation. Mara was according to plan, okay? Because if you look at this, right, oh my god, you picked this Mara is bad, right? No. Okay, you looked at last week's picks, right? I did mention that Mara, okay, we want to wait for it to come down, the price to come down to us. Go back to it, okay, go watch that part. I say I want to wait for the price to come down to us. But I thought that the come down will be pretty quick, right? It will come down pretty quick, but it did take their time, and we did get the entry that we won around $27.69. I did want to see around $27.50-ish, so I'm going to look at Monday, right? If it dips down to around $27.50 and starts rebounding back to $28, I will take a position at around $28. Okay, and that's for Mara itself. So Mara was, in a sense, a slow-moving stock. So again, I guess you could use it for this coming week as well. And let me just show in, okay, the APA, right? Last week we talked about APA. APA was a stock that, immediately Monday it kind of closed down weak. Okay, and since it's a wedge play, right, that I play on the overall oil sector, right, since it's broken down, right, then I was a little bit cautious in entering APA. And I kind of just, took a sideline for APA because I saw other better opportunity in some other stocks as well. So APA was a slower day, so I didn't really touch APA itself. So APA right now, right, if you look at the overall charts itself, it is right now down of the range over here. It's at the bottom of the range and it's showing strength up again. So again, you could take a position over here to swing towards the all-time highs or at least $21.92, which is a decent little profit for APA. And taking a look at CLF, right? Remember we traded CLF, okay? This is a lesson to be learned as well. So again, this we managed to, I say I want to profit taking target around $25. And Monday open, it dipped. I lost all my profits in a sense, but again, I still hold on because my stop loss is still at around $19.50, right? So again, this is the importance of, sometimes you gotta be holding strong. So again, definitely I'll feel the fear that, oh my god, my profits have turned away to the losses, right? But the thing is, the price is coming back down to the area of value. So again, why would you sell at the area of value, right? You should respect the area of value and keep your stop losses at the old area. Okay, so if you panicked and you kind of sold, right, when it came back down, bam, 8% down to the area of value, you sold. Because you're like, oh my god, I don't want to lose money on that. Then it is your emotions taking over. Okay, it is your emotions taking over. You're not thinking it from a logical standpoint of view. You must always think in the point of view that at this price, is it an area of value? Is it making sense to hold on to this trade? Okay, if it has breakdown below the area of value, showing a very negative sign below the area of values, hitting the previous stop loss that you have actually set there, right? Then yes, you should exit out of the trade. But if it didn't go beyond that, right, just goes to your area of value, then very high chance that it's going to bounce there and go back up. And sure enough, okay, on Thursday and Friday, right, it manages to recover very strongly back up. And I'm still up, okay, more than a few $100, I would say, okay, on CLF itself. So CLF, pretty good trade itself again. And also talk a little bit about Beam. Remember Beam, right? I talked about it multiple times before. Okay, I talked about the triple bottom, right? And after that, I kind of mentioned it at around $79 that is reversing the trend. Okay, and the sad thing was I traded it all the way to around here, right, with 13% profits, right? It was so sad. Okay, I took up profits, then it rallied up to it rallied up to around $133. I think more than that, right? On one given day, right? So again, if you bought it at the lows, it will be around 100% up. Okay, yeah, it was a very, very sad thing. Okay, because again, you can see, so even I made a mistake, right? I didn't really managed to, I thought this trade was going to weaken. Okay, it's going to reverse back to the downside, but again, it just showed a massive rally up to the further upside. Okay, so again, even I could be wrong sometimes, but it was a really, really great pick overall. Just that my timing was a little bit not as good. But well, okay, I made money on other trades as well. So again, you can't really win everything, but this is just one of the picks that I want to point it out to you guys. So again, if you traded this company, and I'm pretty sure some of you definitely did, okay, all 1,000 plus of you, some of you definitely did. Congratulations on you, okay, even I am a little bit jealous of your gains. So that's it for the top 3 swing trade stocks for this coming week. And if you enjoyed the video, okay, again, smash the thumbs up button, okay, it's free, just smash it, okay, and I appreciate all the support that I have. All 1,000 plus of you, we are going on to 2,000 subscribers, and I'm really grateful for all of you. Have a good weekend, have a good trading week, stay rational, and I'll see you again in next video. Stock stayed out.